How you go about it is up to you. You are the CEO of your company. Now, the Millionaire Challenge started on January the 2nd, but it started January the 1st. So hopefully you guys have gotten through the first 3 steps. The first 3 steps is A, opening up a brokerage account with somebody. B, already thinking about the monetary amount that you're going to put into those particular companies. Okay, that's step 1. That's step 2. And then step 3 would have been maybe writing down 5 to 10 companies that you're interested in. That's not that hard. That's what your homework should be for next week. A, write down 5 or 10 companies that you're interested in. I don't even know if I want to buy them yet. 5 or 10. B, opening up a brokerage account. So in the comment section, guys, to help everyone that's in the room, write down some of your favorite brokerage accounts in the comment section. Now, guys, this is a DIY room. That means it's a do-it-yourself room. All right. Opinions are going to be told. People are going to give their opinions of what brokerage they feel are the best. But what I'm doing is I'm giving you guys an idea of choices of what you can choose from. Okay. Your job is to take some of these choices and do a little bit of work. Joel can't do everything for you. But as you can see, Ann Barrera says Schwab, which is Charles Schwab, which is what I use. You're going to always hear about the hood. G7, the one and only, talked about the hood. I can't say the word or I will get flashed. All right. You see E-Trade. You see M1 Finance. So there's a couple that are out there. I like what C. Spooner gave you guys a whole list of some of my favorite. Actually, all 4 of them I have. Our family has something within most of those companies. The Charles Schwab's, the M1 Finance, the Robinhood. Oh, dang, I wasn't supposed to say that. Okay, they didn't shut me down. But the hood, all right? If you're new to this room, also, 3 ways that you guys can help the room so that we can grow the room, so that we can educate each other in the room. 3 things that you can do. When you come into a live host room, you make sure that you look and see what the live goal is. Try to help if you can, try to help the live host reach those goals, because those goals is similar to what TikTok sets up for those live hosts. So as we get better as live hosts, the goals get a little bit harder to meet. And that's how they gauge to see where they should place us. If the goals are met quickly, then it puts us out in bigger rooms and bigger communities. It's saying, oh, people love what you're talking about, Mr. Joel. All right. So help me out if you guys can. All right. Or any live host that you enjoy listening to. Another way that you guys can help with the room is tapping on the screen. Tap, 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 tap. There's even if you don't want to tap, guys, there's a way that you can tap. You can go into the comment section. When you go to send a comment to me, there's going to be a heart to your right. When you hit that heart, there's going to be stickers that you can use for the room, but there's also stickers that say tap. Those tapping stickers help just as much as you tapping on the screen. Everybody has that thing they like doing. Some people like, Joel, I'm not going to just sit there and just tap away. I'm taking notes. I'm trying to learn. I get it. You can hit the tap. You can also put out there to tap, and then that will help everyone else engage and help tap in the room too. Because the worst thing that can happen to a live host is a puzzle that shows up on the screen, and we got to go there and make the puzzle go over because they need to know if we've still here, right? Every live host gets embarrassed when they got to take that little puzzle piece and put it over. I had to do it earlier in my Superfan live, but that's because it was a couple of people there and we were talking on a panel and we weren't engaging. Thank you for the heart me, my favorite 4 journeys. Thank you for the paper crane, Safari. Thank you for the paper crane. So there's a couple of ways that you guys can do that. Like I said before, tap, help with the live goal, and then you can also help with these supporters that are here too. The supporters that are in this box right here, Make sure that you guys always come in and engage with the top 10. Those top 10 are helping the room tremendously. It's making the live host feel good. It's making TikTok feel good because they getting their little cut. It really, really does help the room. All right. So let's talk about beta. Let's get into educating. I think everyone is here now. Let's get into beta. Beta, guys, is the room, 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 room. It's the horsepower. It's the horsepower that your stock has. Every single stock is categorized differently in the way that people are buying it. Okay? You might have a stock that's like a Honda Accord. You might have a stock that's like a Prius. You might have a stock that's like a Ferrari. What do I mean by that? These different vehicles, although they're all cars, different stocks are going to move differently than others. As a swing trader, as a day trader, as an investor, it's very, very important. People, if you want to, Pops always told me before I get into educating, he always lets me know. Pops and Raymond, I appreciate that. Those are my father figures. Raymond and Pops, I appreciate it. All right, before I go into educating, my name is Joel Harrison. I'm an expert in stocks, options, futures, and a little bit of cryptocurrency. This is a DIY room. It's a do-it-yourself room. And anything that we talk about today are the opinions of Joel Harrison. They are the opinions. This is a DIY room. We now have access to several GPTs. All right, way better than your Google search and your Yahoo search and your Bing search or whatever you use. We're all using GPTs now. You guys are still using dial-up if you're still using Google search, even though Google has an AI feature on the Google search now. That's a little bit better than its old thing. But the reason why I'm saying that is anything that we talk about today, make sure that you guys are fact checking. I'm not always 100% correct. I might be a little bit off. I speak in absolutes all the time. All right. So make sure that you guys are doing your due diligence. All right. But let's talk about beta again. Beta does have its own definition that Wall Street gives it, but I like to dumb it down a little bit so that we can all understand it from my standpoint, right? So when I look at beta, I'm thinking of horsepower. I'm thinking of how much that stock actually can move. And it's important to investors, it's important to swing traders, and it's important to day traders. As a swing trader, if I'm really, really trying to get the most bang out of my buck and make a lot of money and make a fortune on a company, I'm not going to look for companies with low betas. I'm going to look for a company with a high beta, because the higher the beta, that means it moves. That means it can move 50 or 100 or 200% in a year. A low beta company is not going to move that much. All right. A low beta company may have been around for a while. Think of low beta companies as your older stocks, right? Your babies and your adolescents, they're moving. They can run the 109.9. But Usain Bolt might not be able to run under 10 seconds anymore. He's getting older. As he gets older, his beta is gonna decrease. You might have the heart to want to move, but the legs just might give out. Some of these companies are so big and so diverse, they can't grow anymore. And see, you make your money off of the growth of a company. So then if you become a low beta company, what do you have to do? I got to pay somebody to invest in my company. I got to pay you to buy some of my stock. See, the high beta companies are like, I ain't paying nobody nothing. Why would I pay you money when I'm giving you 20 or 30%? Get out of here with that crap. But these older companies are like, no, we want our investors to keep their money in the stock. Even though the company may be growing at a slower pace, maybe 1 or 2%, they got to offer a dividend, maybe from the profits that they're making, to keep people invested in the company so that the stock won't plummet and everybody pull their money out of that company. Now, betas change. How is a beta calculated? Different platforms, unfortunately, calculates the beta differently. If you're on Yahoo Finance, all right, if you're here, I tell people that beta is closer to what's real. Now, some people say, well, Joel, real is what's happening on an everyday basis. And I get that, but that's my traders that are talking. See, if I go to Thinkorswim and I pull up the default setting for beta, it's going to be calculated for your traders because it's including volatility and letting you know what's happening right now. Okay. Like right now, I think one of the top companies that has a beta has like a low beta. Like I think Apple or something's not even really moving that much because volatility is low right now and Apple's not really doing anything. But Apple over time is not a low beta company, but maybe week to week it is. So just to bring it back, beta is just the horsepower that company has. Palantir is going to have way more horsepower than Heinz. Okay. So if I was interested in buying something like a Palantir that's got high beta, what can go up can also come down really, really hard. It's equal movements. So if a company can grow 200%, even though I'm telling you guys it's equal movements, you can't drop negative 200%, right? So if a company can grow 100 or 200%, I always tell people those betas that are like 1.5 or 2.0, they're going to drop 50%. So if a stock runs 200%, let's say it runs from $100 to $300, it's probably going to pull back to about 150 before it goes to 450. And then it's going to pull back to 225 before it goes to 600. Okay? That's how high beta companies operate. Where you guys lose money is a lot of the times you guys are buying these high beta companies at the highs, not knowing that it's a high beta company. And then when it drops 50%, you sell it and then it turns around and then grows 200%. And you're like, why can't I catch this? Why am I losing money? You're losing money because you want to catch these high beta companies when they sell off 50% before they run 300. Nvidia did that this year. Nvidia dropped like 40 something percent. And then all of a sudden it ran 200 or 300%. Fact checked it. Fact check those numbers because I don't know the exact numbers, but they were close to that. I want to catch high beta companies when they're bullish, when they pull back. I'm never there's no way you're going to see me catching Palantir at its highs unless I'm swing trading or day trading. As an investment, boy, I'm sitting back and chilling. There's no way you're going to see me catch any high beta company unless it's down 30 or 40% as an investment. Keyword, as an investment. Investors that are out there, guys, you can wait. Stop buying these companies because Joel came out with a receipt and I want to prove him wrong. Joel's in Palantir. I'm going to be in Palantir. Joel, are you still in it? Yeah, but if I got an 80% profit, I can stomach it dropping 50%. You can't. I have 80% cushion. So I can put my stop at where I bought it and I'm still not going to lose any money. You jumping in after I'm up 80% is not the smart way to go. And I'm just saying Palantir because it's one of the popular high beta companies like Palantir, MicroStrategy, Tesla, all of the quantum stocks. Just high beta companies. A lot of the semiconductors now. Nvidia is the first high beta company that's that big to keep doing what it's doing. Like Nvidia, what it did in this year has never been done. Well, not this year, 2025. Nvidia grew a couple of $1 trillion in size. It grew a couple of $1 trillion in size within a year. That's unheard of. We just had the first $1 trillion company like 4 or 5 years ago. Fact check that too. I don't know the exact year. I just know it was like around COVID is when we saw our first $1 trillion company. And now we got, guys, since 2019 and 2020, when we saw our first $1 trillion companies, we got $4 trillion companies now. It took us a lifetime. It took us 100 years to get to $1 trillion. And then within 4 years, we saw $4 trillion companies. Absolutely bonkers. And the company is still making money. That's what's crazy, guys. So many people are like, AI bubble, AI bubble. Guys, have you listened to the last couple of earnings for Nvidia? They're not losing money. They're making money. It's crazy. It's the craziest thing I've ever seen. I'm like, these countries out here are obviously printing money. Because where are these trillions coming from? Where are these trillions coming from? Obviously, they at the printing machine just printing. Which is why inflation is probably through the roof. It ain't because of Biden. It ain't because of Obama. It ain't because of the first Bush. You know, this inflation started when George Bush started printing money back during the weapons of mass destruction. I don't care who started it. I don't know where these trillions came from, but I'm trying to get a piece of it. So beta is very important. I'm trying to make sure that you guys understand beta. Beta is very, very important when it comes to what you want to buy and what you want to hold. Now, you don't necessarily have to, it doesn't have to be so exact where you're like, it's got to be 1.0 or 1.2 or 1.5. Betas change. Betas can change drastically over 1 year. A company can move, and then just not do anything for like a year. Microsoft had a low beta for like 10 years. And then all of a sudden it became a growth company again. And its beta just started to rise through the roof. It got into web services. It got into everything. It got into AI, web services. It literally got into all the number one things that everybody is looking for. So companies go through periods where they're low beta, high beta, low beta, high beta. Now, what is beta based off of? Beta has always been based off of what the S&P 500 is doing. The S&P 500, guys, is the 500 largest companies. If you put all of those companies together and you put them in an index, the beta is going to be 1.0. 1.0. Anything higher than that 1.0 just tells you that those companies are moving more than what the 500 largest companies are doing. It's doing more than what the average is. Now, the average is not going to just be a number. Look, the S&P at some point during the year was up 28%. That's like a high beta move. But companies that had a higher beta than S&P were probably up 30, 35, 40%. It also works to the downside. If the S&P is down 15% or 20%, you're almost guaranteed Apple, Microsoft, and Google are down 30 to 40%. I know you guys are like, why? Because that's how the market works. I know for so long you thought that the stock price was based off of how much they made and there was a calculation that gives you the stock price. No. We are making and losing money on the investing side, and investing is sentiment. Sentiment means, how do I feel about owning Apple right now? Is this a great environment? If it's a great environment, we throwing all our money at it. If it's a high beta company, you're going to make a lot of money during a bullish period. We don't even know how much it's going to be. But I'm going to ride it. I know it's going to be higher than the S&P on average. But when the market sells off, you don't want to be in these high beta companies. These high beta companies bite you right in the behind. That's why when everything is good, everybody that's in crypto, everybody that's in semiconductor companies, everybody that's in anything that's making a whole bunch of money, we're like saying, I told you, I told you, I told you when it's going up. But then when the market turns around, it's quiet, crickets, because they are losing everything. Because high beta companies will go down 40 or 50%, 70% in some cases. Y'all know for years, Bitcoin dropped 70% like every year for like 10 years straight. It will grow 200 or 300%, drops not 50, drop 70. I made a ridiculous call the first time. Like, you remember when I told you guys the story of me holding Bitcoin until it got from 5,000 to 50, and then I got out in 2021, and everybody said, why did you get out? What I didn't tell you was when I got out, I also predicted where it was going to go down to. And people were like, Joel, how did you know it was going to go that low? I said, because it's a high beta asset, and all high beta assets that grow 200 or 300% in 1 year, they gonna fall 60 to 70%. All I did was take the highs, which was, I think, 70,000, and I multiplied that times 70. So I took 70,000, I multiplied it times 70%. Or did I do that right? Whatever the case, it was 70% off. So 7 times 7. And then and that was $50,000. I subtracted 49,000 from the highs, which was 70,000. And that took it down to a $19,000 coin. And I told everybody, Bitcoin's going to 18.9. Nobody believed me. Not only did it drop to 18.9, guys, it overshot that and went to like 15 or 16,000 a coin. So I predicted where it was going to go, and then it proceeded to turn around from 15 to 16 because it's a high beta stock, and then it went to 120. Because that's what high beta stocks do. They're great going up. They're terrible going down, but that's when you buy them before they go up crazy again. So be careful if you're getting into high beta stocks. That's what they do. A high beta stock is going to drop 50% minimum. Minimum. That's why most of those stocks I'm like, all right, when it gets cut in half, call me. But Joel, does that mean the company's going to zero? No, we're on the investing side. The company's still going to do what it do. We're on the investing side, people. We're not on the operation side. We don't see what's going on inside the company. We're putting money into the company so that so they can take those funds and reinvest it in other things. They can't grow without they can. They need our funds so that they can reinvest in other companies. If the sentiment is bad and we're pulling funds out of it, the company is just going to continue going flat or doing what it's doing until they make us hype again. When we get hype and sell us on a dream, then we'll start putting funds back into those companies and pushing them up through the stratosphere. And then we'll take our profits and let them drop 50 or 60%. This is high beta stuff. And then it's rinse and repeat. If you understand that before you buy anything, it's easier to do it. High beta companies are going to operate totally different from, let's go on the opposite end, because you guys won't go in the middle. I always tell people that when you're getting into the market for the first time, stick with things right around 1.0 beta. Try not to go higher than 1.2. Try not to go lower than like 0.8. Why is that? Because for some odd reason, humans are extreme. Y'all either want the Palantirs or you guys want some stock that don't move at all, like an AT&T or a Visa. Y'all conservative folks out there, y'all love y'all some AT&T and Visa. And I can't stand those companies. You're so conservative and so safe, you ain't even making any money. You might as well just go buy a CD. Why even get into the stock market? Just go buy a CD and get guaranteed 3 or 4% and call it a day. Why even put yourself in position to lose money? Because I want to own a stock, Joel. Just go buy a CD. Just go buy a CD. You're too extreme. You want to make money, but you can't. And you're stuck on it. And a lot of you guys are stuck on dividend stocks. And dividend stocks do the opposite. The higher the dividend, the company's probably not going up at all. They're literally offsetting they're offsetting the gains with the dividends. They're literally going in there saying, man, our company might drop 8%. Well, then offer an 8% dividend. Our company, the way that we're operating right now, I think the downside is about 3%. Well, then offer a 3% dividend. So they can at least make nothing. Well, then why are they buying it? I don't know. They're not making anything. And it'll be different if the stock just stayed at $80 and paid you a 7% dividend. No, it's dropping 7% and then giving you 7%, and y'all buying more. Look at this 8% dividend. And the stock go down for 20 years. Y'all are either on one extreme with the super ridiculous high beta companies, knowing you should be somewhere in the middle. Conservative folks coming in buying MicroStrategy. Why are you buying MicroStrategy and Bitcoin? That's too much beta for you. You need to buy a S&P 500 or an Apple or a Microsoft, which is interesting because even Microsoft and Google and Apple are pretty high beta. And in my opinion, those are like boring, low beta companies, in my opinion, if you under, 70. But to each their own, right? Just buy the S&P 500. The S&P 500, and if you want a little bit more beta, buy the NASDAQ. If you're afraid of your company going to zero, then buy the S&P 500. If you want a little bit more beta, you buy the NASDAQ. But guys, the NASDAQ, when it's going up, it's pointing, it's shooting the bird at the S&P. They're like, why would y'all buy these 500 largest companies when y'all know everybody's talking about AI and tech and data centers? If everybody's talking about AI and robotics and Tesla and all and crypto and Bitcoin and all this, then why aren't y'all invested in the NASDAQ? Because you can literally just buy the NASDAQ, the QQQs, and you get to capitalize on anything that's tech going up in value. And the reason for that is because when everybody decides to pull back a little bit, the NASDAQ is going off a cliff, and it's gonna go down harder than the S&P. Historically, it will. So the S&P is kind of like your safe gauge. Anything above it, you're a little bit aggressive. It's great to be in them when things are going up. When things are going down, you probably want to lean away from them. That's why when the market sells off, you see a rotation into all these boring companies. All of a sudden, you see soup companies and cereal companies. You see Hasbro, Disney, Nike, all your staples, all your secular companies. They all come alive when the market starts to go down. But nobody wants to buy a Nike or a Disney when the market's going up. Why would I invest in something like Nike or Disney or Hasbro when I can be invested in Broadcom and Bitcoin and Apple and Google and Netflix? So yeah, there's rotations in the market. When everything is going up, it's great to be in high beta companies. When things are going down, it's better to be in these low beta companies. At least to protect you a little bit. It doesn't protect you fully from the downside, but it protects you a lot. And it's funny because when the market is going up 80% of the time, and the bulls are talking. We all be making fun of everybody that's buying dividend stocks and CDs. And we're clowning them and telling them they scared of making money. But I'm going to be honest with you guys, 80% of the time when the market's going up, that's what you should be in. Then 20% of the time when the market falls, everybody that's got dividend stock starts saying, see, I told you everything that I learned growing up from my mama telling me to put my money in a savings account is paying out now because look at your account. But what they don't realize is that out of 5 years, 1 year is going to be like that. And in 4 years that you're going to get made fun of. For 4 years, you get made fun of so that for 1 year, you can finally say, see, this is how you're supposed to do it. So in my opinion, instead of going drastically this way or drastically that way, straddle the fence and being something that's right around 1.0. Then you can be right there smack dab in the middle and watching these two extremes argue. The Bitcoin people battling the dividends, beating up on the crypto people. Now, Archie says, so growth is king. I mean, over time, it actually is, to be honest. If you got time, you need to be in growth companies. Sorry, guys, you just got to. I am not going to put all of my kids' funds in Disney, even though they love the Disney park and I love going there and I get these sentimental values. I don't know if you guys seen my page. I took a picture with the Millennium Falcon. I went and bought me a Jedi robe. We went and saw the Harry Potter museum. I had more fun than my kids at Disney. I will not put Disney in my kids' accounts. Even though I love Disney. Guys, every mug I got is the Mandalorian and Grogu, and I just love Disney. But I ain't gonna invest in it. I'm trying to make money. Disney might go through a growth phase. It's not going through a growth phase right now. Disney just chilling. But don't Disney own Hulu? Yeah, but Disney is having a hard job encouraging high beta people that if they can encourage the crypto people and the Nvidia people to invest in Disney, then Disney stock will go up. But they don't have that language yet. They don't know how to talk to these individuals that's throwing funds at all of these high beta companies. Once they figure that out, which Hulu is it, in my opinion, you'll start maybe seeing that company grow again. A lot of companies go through a phase where they don't do anything. Guys, Microsoft didn't do anything for a decade. Microsoft got lost in the sauce because Apple and Google and all of these and Meta, they all blew past Microsoft and left Microsoft in the dust. And Microsoft was like, man, we got to do something. Everybody learned web services. And then once web services was attached to the top companies, they all started to hang together. All of their market caps were the same. They were just every month it was a different company that took over. As guys, there was a time, and it was funny. When we hit that $1 trillion market cap, which was a resistance level for all of us, 4 or 5 companies took turns being the largest market cap company in the world. That's when I started laughing. I was like, look at here. Amazon, Microsoft. What 5 companies was it? It was Apple, Microsoft, Amazon, Google, and Meta. Within a year, all 5 of them took turns becoming the top. Well, Meta didn't do it. Meta became a $1 trillion company, but the top 4 took turns being the largest company on the planet. And Nvidia wasn't even in the talks at that time. They just took turns. Now, was it because they were making more money than the other company? Nah. It was just investors saying, okay, you hit $1 trillion. Let's roll our money out of your company. And now let's put it in Google. All right, Google, you hit $1 trillion. Let's take our funds out of Google and let's go put it in Amazon. Hey, Amazon, you hit $1 trillion. Let's roll that money out. Guys, who's next? Well, let's go through our list, guys. Who all hasn't hit $1 trillion yet? Well, Eli Lilly didn't do it. It looks like Berkshire Hathaway hasn't done it yet. We got another. Oh, you know what? Bitcoin hasn't done it yet. So they come out with a list. Who hasn't hit $1 trillion yet? Raise your hand. I haven't hit it. All right, come up. We're going to rotate our funds. We're going to put it in your company until you hit $1 trillion. And then we're going to take our funds out of there. And then we're going to roll it into this other company. It was a joke. I don't know if you guys was watching it at the time. It was a joke. I was just laughing because I was like, man, if people realize what's happening at the top, like, you would not be afraid of this market. You could be afraid because they are playing games. So you still want fundamentally good companies, guys, but we are on the investing side. We're on the sentiment side. When sentiment is good, you want to put your foot on the gas in high beta companies. When sentiment is bad, you might want to pull back a little bit because it's extreme. When it's going up, we always overshoot to the upside. When it goes down, we literally overshoot to the downside. The high beta companies are going to get hurt the worst, no matter how well they're doing as a company. But what ends up happening, and I tell you guys this, when the market does start to sell off, keep your eye on the high beta companies that aren't falling. Because everybody gets hit. When the market sells off, everybody gets hit. But some companies go down more than other. So let's say I'm looking at Palantir, Nvidia, Microsoft, and some other company. Everybody else is off 10 or 15%. But for some reason, Nvidia is only down 2 or 3%. Even though it's down, it's not down as much as everybody else. That tells you that investors either know something or why aren't they selling this one? I start writing that information down. I start watching the companies that aren't falling as much as the other beta companies that are in the same category. And then those are the ones that I go after when the market starts to turn around, because they usually turn around first and pull up everybody else. So make sure that you guys, those are little tricks that we do when we're in this particular market. All right, so let's get to some of your... So beta, if you want to know the definition of beta, beta is just a measure of a stock's volatility in relation to the overall market. All right, the S&P 500 has a beta of 1.0. It's never going to change. I don't want to say never. Anything can change this day and age. Trump might come and say, I want to make this be called the Trump's beta. Beta Trump. Beta T. He putting his name on everything. I'm like, just get your own thing. Why you got to share your name with another president? Like, just either let it be Trump or the other president. Either this need to be called beta or Trump. Just call it Trump. Trump 1.0. I respect that more. Anyway, he putting his name on everything. The S&P 500 has a beta of 1.0. 1.0. It's not going to change. Anything that has a beta that's higher than 1.0 probably fluctuates. It doesn't mean that it's going to absolutely make more money this year, because it works the opposite when the market goes down. If I have a beta that's 2.0 and the market is down, it's almost certain that that stock is down double or triple how much the S&P is down. If the S&P is down 10%, I promise you MicroStrategy down 30, 40, maybe even 50. If the S&P is down 20%, it's almost certain Bitcoin down 70. The more that the S&P is down, the higher your cryptocurrency is probably going to go down in value. Everything is based off of this. It's like a switch. When things are going up, beta is great. When things are going down, beta is terrible. It's terrible. Beta also in the options market, guys, has the highest premium. The higher the beta, the more the premium is going to be for that option because it fluctuates. So that doesn't mean stick to low beta companies. I'm just telling you guys the gauge. Know what you're looking for. So a beta of 1.0, these numbers aren't exact. I usually represent the one with 10%. So if something has a 1.5 beta, more than likely on average, it's going to be down at least 15% that year at some point. If a stock has a 2.0 beta, it's almost 100% certain that at some point within the next year, it's going to drop 20% minimum from its highs. Minimum if it has a 2.0 beta. Minimum. That's minimum. That means it's going to do that absolutely. So if you're in a Palantir right now, you're going to experience a 20% drop. The question is, can you stomach it? If you're in Bitcoin, you're probably going to experience, which we already have, a 20%. Guys, this 20% drop from 120 to 90 is normal. It's a high beta asset. It's going to drop 20 or 30%. It already did it. I'm confused because I've seen Bitcoin drop 50 to 70% every year. So I still got my finger on the fact that if it hit 130, it's probably going to 65. And I've been holding to 65 for the longest, like, God, it's going to 65. If it doesn't, it'll be the first time Bitcoin didn't drop 50% since it came out. And that's actually a good thing. If we go a full year and Bitcoin doesn't drop at least 50%, guys, that is actually great for the crypto market. Because that means, oh my God, it's becoming more stable. The beta is actually dropping. And that makes sense. The more liquidity that an asset has, think of it like your tub. In my tub, I can get in my tub and I can move around like this and I can splash all the water out of the tub. But if I was in the ocean and I went back and forth, I could barely make the ocean move. Let's not even say ocean. Let's just say pool. If I was in a tub, I can push all the water out the tub. If I was in a pool and I go back and forth, I can make waves. But more than likely, only the waves that are close to me are going to jump out the pool. But the waves 20 yards away, I'm not going to even affect anything that far away. That's what's happening with crypto. The larger crypto becomes, the more liquidity that goes into the crypto market, the less volatile the market's going to be, the more stable it's going to be. So if Bitcoin does not drop at least 50% within the next 3 to 6 months, I actually think you're going to see a whole bunch of money roll into it because it's letting everybody know that it's not as volatile as it used to be. Okay, some of you guys are thinking the opposite. And I'm like, no, that's not how it works. So beta, the stock market, the S&P usually drops about 10%. Somebody said Disney's down 30% right now. So when you got a low beta stock that drops 30%, that is not good. That is ungoodly. All right. Last chart before we get to some Yahoo Finance. All right, so these are not exact, guys. If I had to draw something and I had to try to make everyone understand, this is what I came up with. So I have a calculation that I created to give me an idea of what a company can do. It's not exact, but it works. It works for me. It works for my family. 1.0 is usually a 10% drop. So if you see a company like a Walmart or a Microsoft or anything that has a 1.0 beta, I can almost expect that it's going to drop at least 10% from its swing high within a year. The S&P, guys, drops 5 to 10% every solitary year, whether you know this or not. Has it dropped 20%? Yeah. When the S&P drops 20%, that's why it's a big deal, because It's a 1.0 beta. So for it to drop 20%, there's a lot of selling happening. But usually what I've seen in the charts is when the S&P drops 20%, if that volatility index is above 50, that's the end of the selling. Companies that's got a 2.0 beta in just a regular environment, just like regular volatility that you see right now, probably going to drop 20% minimum. If the volatility picks up, guys, these numbers pick up. When the volatility index goes up, a stock that normally drops 10% going to drop 20. A stock that drops 20% going to drop 40. A stock that drops 30% is going to drop 60 to 70. I would put crypto at one point in that 3.0 range. That's why Bitcoin would drop 70% every year, and then it would always come back. Because everyone thought that it was selling off because there was something wrong with it and not realizing that it's already a high beta company. So it was going to drop 70% regardless. It's just y'all just now figuring that out. So for an example, back in April of 2020, Apple had a 1.17 beta. Joel ain't even thinking about buying Apple unless it's at least 11.7% down. Minimum. That doesn't mean that Apple can't drop 20 or 30 or 40%. It just means that my initial buy of Apple is gonna be 11.7% or lower than its swing high. So if I see Apple hit $100 and it starts to reverse and I'm thinking about buying it, Joel ain't even touching Apple unless it's got an 8 in front of that number. 89, 88, 87 minimum. Because of its beta. Betas do change, and from what I see, sometimes the betas just be off. So you can't use this as 100%. I've seen people look at companies and thinking that it was a beta stock a low beta stock, and it was moving because it just started to move. So I always tell people to take this number first and then look at maybe the last year and see what happens. See if the numbers go with what you see in the charts. So let's say we pull up a Walmart and Walmart has a 0.8 beta. Then that's telling me that Walmart, when it sells off from its highs, shouldn't be no more than 10%, 10 to 15%. So if I see it sell off more than 15%, something is going on with the company. Okay? I'm just giving you guys an example. All right? So we're going to pull up some betas and we're going to look at them. All right? Now, on Thinkorswim, guys, the beta is going to be different. Look at what I see here on Thinkorswim. So on Thinkorswim, these are a list of... let me make that smaller. These are a list of companies. Let me make that a little bit smaller. One more again. That should do it. All right. Can you guys see that? Let me see if you can see it. Just barely. Let me make it a little bit smaller. Trying to make it where you guys can see it. Can you guys see the name of the stock on the left and the beta on the right? Okay, you guys can see it. Y'all see how Bitcoin on this chart says 1.0? That's not right, in my opinion. But Bitcoin its beta may be coming down, which I don't believe that 1.0. So those are the futures that you guys are looking at. But if I was to look at Apple, y'all see how on the Thinkorswim chart, the Apple's beta is 0.33? That's because this is calculating beta for your traders that are out there. They're telling you that right now the volatility is so low that Apple's not really moving. So I don't want you guys to confuse the beta that you see on Thinkorswim versus the beta that you see on Yahoo Finance. They're going to be calculated over a different amount of time. So I'm not one of, you got some people in here that want to make sure that the beta there and the beta here has the same number and they know the exact numbers all the time. I don't really have to do that because I can just look. I've bought stocks for so long. I know what's beta and what's not beta and what they're going to do before I even look at the beta. But as a newbie, if you don't know but 5 or 6 stocks that are out there, you might not know what's high beta or low beta. So I encourage you guys to use the Yahoo Finance page as your determining factor of what the beta is and not use the Thinkorswim unless you're trading. All right. And yes, there's probably a way I can go in here and make these numbers the exact as the Yahoo Finance. I just don't choose to do it. All right. But there is a difference. All right. But as you can see, all of these different companies, if you go over here to the right, you're going to see a list of companies that have their beta. So let's play the beta game. Let's everybody pull up Yahoo Finance. What I want you guys to do in the comments section is let's just look in any and every stock. Everybody list any company, any asset. I don't care if it's crypto, anything. Just give me a company, Apple, Microsoft, Google, Facebook, CrowdStrike, Disney. I don't care, Nike. And let's look up the betas and let's see if we can see something in the charts. And I want to show you guys how fast you should be able to pull up this information. And at that time, I'm going to pull up Yahoo Finance on my charts. Apple, for example. I don't know if you guys can see this, which is why I think you guys should put screencast these sessions on like a bigger screen, like a TV, so that you can see it. Because it's very hard to see this. Like I can barely see that. Thank you for the heart me, Ayo. But yeah, when I'm looking at this particular chart, can someone tell me what the beta of Apple? What's the beta of Apple that we're looking at right now? What is the beta? And what I want you guys to also do is we're going to pull up the 1-year chart. So we're going to pull up the 1-year chart. We're going to I can't say KILL, 2 birds with 1 stone. But that's what we're going to do. We're going to look at the bias and we're going to look at the beta at the same time. All right. So Apple has a beta of 1.11. And is the company bullish or bearish? The company is bullish, right? So even if I was to look at some of these, what we call dips, remember how I said if the beta is higher than 1.0, it's probably going to drop a minimum 10%, a minimum 10%. Nobody should be buying Apple less than 10% of whatever the swing high is. A swing high, guys, is if you look at the chart, you're going to see the stock go up, then come down. You're going to see it stair step. It's going to go up, then down, then up, then down, then up, then down. Even though it's going higher, it's going to stair step up. A swing high would be one of those highs before it sold off, before it moved again higher. All I'm going to do is all of these swing highs, I'm going to go back and see how much it actually dropped. So watch this. When I go back and I look at Apple, the first swing high, the previous high before we got this nice little push to the upside, the high, guys, was $204. Now, remember, I want to buy Apple 10% off. What is 10% off of $254? What's 10% of $254? It's going to be $25. So if I see Apple hit $254 and I know it's going to drop 10%, Joel ain't even thinking about buying Apple unless it drops a minimum $225. Minimum. Apple dropped all the way from $250 all the way to $190. So not only did you get that 10%, it dropped a little bit more for you. It actually dropped 25%. But remember, I told you the 1.0 is 10%, right? 1.5 is like 15. I'm going to give you guys my personal number. Microsoft, Google, Apple, every single one of the companies that are at the top, including NVIDIA, Everybody knows this about me. I'm not buying any of those companies unless they're 20% off. And the reason for that is because I come from I come from the real estate side of business. That's where I started. I started in real estate. In real estate, no investor on the planet is going to hire you if you can't find a property with at least 20% equity in it. So my hope for years, I had to find property that was 20% lower than its appraised value. 20% has always been a number that we look at in the real estate game, because if you're paying for mortgage insurance, once you have 20% equity in your home, you don't have to pay that premium anymore. So I came with that same philosophy when I came into the market. Joel ain't buying no company unless it's got 20% equity in it. It's built in it. It's no way you're going to see me buying things at all-time highs, ever. Ever. Because if I'm buying anything with a beta higher than 1.0, 10% minimum, but 20% is the number that I look at. Now, will I buy something when it's 18% down? Yeah. Like, I'm not so stuck on that 20% that I can't get a good deal. Because sometimes I'll just be sitting on a whole bunch of cash. Apple finally gets to a value I want. I've been waiting for like a year to get in. Sometimes I'll get in a little early, which is why I don't always put all my eggs in one basket. If I want to put 10,000 in Apple, I see it down 18% and I really, really want to buy it, I'll buy $5,000 worth of Apple. More than likely, it's still going to drop the 20% that I thought it was going to drop in the first place. Then I can throw my other $5,000 at it. And then I ride Apple all the way up to where it is right now. If I was to go to the previous swing high before that one, let's calculate it. That high went from 250 to 190. If I go back to the high from 2023, Apple was $200. So I start doing my calculations. $200 times 10% is $20. You ain't gonna ever see me buy Apple for less than $180 after it hits $199. Once it gets down to 180, I can think about buying it. Not only did it get to 180, guys, it dropped from 200 to 163. 200 to 163. It dropped $30. It dropped 30. I thought it was going to drop 20. It dropped 30. If I had just put a quarter position in and it dropped a little bit more and then I put another quarter position in, I would have been able to ride it all the way up. Y'all see how I was able to buy this stock just off of percentages? I didn't even have to really look at no charts unless I was looking at the swing highs and lows just off of beta. I'm showing you guys a strategy just off of beta, guys. Not even, you don't have to pull out 57 freaking indicators to try to figure it out. This is strictly off beta. Beta is this. If it's a bullish stock, it's gonna fall. It's not if, guys, it's going to fall. Whatever that beta is, minimum, as it goes higher. So when the stock is up 30 or 40%, people take profits. They know it's probably going to drop 15 or 20. Everybody jumps back in again, and it's rinse and repeat over and over again for years. Not months, years. Because stocks stair step up. Y'all see this chart? It's stair stepping up. All right, let's look at some other stocks. I had to show you guys how to do it first. Somebody said, what date is it? What date did Apple do what it was doing? The date that it hit its swing high was December of 2024. And then it dropped. It bottomed out in March of 2025. The last time it hit a swing high was in December of 2023. And then it bottomed out in April of 2024. Y'all see how it's bottoming out in March and April? We might be getting that now. Apple hit a high of $278. It's no way you gonna get me to buy this stock because it's $9 off its all-time highs. You're never gonna get Joel to do this. This is for my investors. This is not for my traders. If I had my trading hat on, guys, none of this matters. None of this crap matters if I'm getting in and out the same day or if I'm buying something and selling it 2 days later. A lot of you guys right now are already confused. You don't even know how to swing trade. And you're like, Joel said, wait until it's 20% down. And I'm like, are you swing trading? Like, what is your strategy? Well, Joel, my strategy is to buy something and sell it in 2 or 3 days. Well, if you're buying something and selling it in 2 or 3 days, does it matter what the beta is? No, it doesn't. If I want to get in something today and sell it in 2 or 3 days, I kind of want to know what the beta is, because if I'm buying options on it, the premiums are going to be higher. Higher beta stocks move. So, a micro strategy in 2 or 3 days is going to move more than maybe a Disney. But I'm not going to use the beta to say I'm not going to swing trade it until it's down 20%. I see so many of you guys mixing strategies. The strategy that I'm showing you is an investment strategy using beta. But it's also knowing what beta is as a day trader or intraday trader. I'm teaching you guys how to decipher your brains. Day trading brain's different from a swing trading brain, which is different from an investing brain. All right. I want to make sure you guys understand that, because I have people that come to me all the time and they're like, all right, Joel, Apple dropped 20% and I just got into it. I bought an option 3 days later. And I'm like, why? Why? Because you said it. I calculated the beta, Joel. I went in. I saw that the beta was 1.5. You said that stocks with a 1.5 beta usually drop like 20 to 30%. I'm like, yeah. So then I bought an option with a Friday expiration, and I'm wondering why it didn't pay out. Because you were mixing a swing trading strategy, which is actually a day trading strategy, with an investment opportunity. There's 2 separate things. But Joel, you said you would never buy it unless it's 20% off. Yeah, as an investor, I will buy Apple tomorrow at the all-time highs. But why would you do that? That doesn't make any sense. Because I'm intraday trading. It doesn't matter. I want to get in and out the same day. I don't care what the beta is. It's a different strategy. I got to get you guys there. Because a lot of you guys are doing that. You're mixing some information and then you're putting it with other information that doesn't go with your strategy. Which is why it's very important we know who we're talking to. Investor Joel is talking right now. Day trading Joel is bored right now. Well, day trader Joel's not bored because he's like, oh, that's why my options premiums are higher. I get that from today. I didn't realize that the micro strategies and the Teslas, their options are higher because it's more beta. I did learn that today, Joel. Thank you. Thank you, bud. But investors, if you're thinking about investing in something, relax. It's gonna drop 10 or 20%. Relax. Chill. You got time. You're not gonna miss out. Let it come in. When it comes in, get in. The problem is when it starts to sell off 20 or 50%, y'all be thinking it's going to zero. See, it's easy to say, okay, Joel, I'll buy it when it's 20 to 50% off. When it's 20 to 50% off, usually the market is so negative that everybody thinks the world's coming to an end. Everybody's crying. Oh my God, the guy from The Big Short just put out a post. You know, he called 2008 and 9, Joel, and he just said that he's short. I'm selling my whole portfolio. And I'm like, why? because he called the Big Short. I was like, you know, the last time he was right? When? In 2008 and 9. He ain't been right since. He was very right in 2008 and 9. Yeah, but Joe, he's a billionaire and you're not, so I'm going to listen to this guy. I'm selling everything. He's selling everything. He sells everything every year. Every year. Every year he sells the market. This is it. This is it. Just like 2008. 2008, everybody felt 2008 coming. It like everybody knew. I had people with 400 credit scores buying $900,000 houses with no docs. Everybody knew the world was. Everybody knew corruption was happening. That ain't the type of environment we in right now. All right, corrections are good. A correction is when the market sells off. But you got to make sure that everything is bullish at the time. That's why it's very important that you guys are looking at these moving averages and making sure they're still pointing at least sideways. If they're pointing down like in 2022, guys, by April, like 70% of the stocks we were looking at had downward 200-day moving averages. It was no way. The market had too much negativity for it to go up. So we knew in March or April of 2022 that it was going to be a bear market. I wasn't sold for the first 3 months. For the first 3 months, I was talking just like this. You know the dude from The Big Short? He said he's shorting. And he been wrong for 20 years. I said that for 3 months until he was right. So I take that back. He was right in 2008 and he was right in 2022. That was it. And then I was like, you know what? He's right. But I let the market tell me when it's time to get out. And I was able to get out 4 months later. You got time. The market's, you're not going to look up one day and the market's down 30% in one day. It ain't never been down that much in one day. It's going to stair step down to 30%. You will see it when it happens. The percentages will start telling, the people on TV will start saying, guys, 70% of the stocks 200-day moving average are turning down. Once it gets to like 50%, if 50% of the 500 largest companies 200 days start to angle down, the market's probably going down for a whole year. We ain't there. Everybody's 200 days angled up. Like everybody's except Nike and Disney. And who else is down during this super bullish moment? It's like 4 companies out there that's losing. Pfizer, Disney, and Nike. That's it. Those are only companies losing. And y'all going nuts selling everything. I'm like, guys, the market ain't told you to get out yet. Wait, you good. You good. You good for now. When the market starts to turn around, you guys are going to see it. I'm going to show it to you guys. It's not going to look like this chart here. It's going to just sit at one level for like 4 or 5 months and then roll over. The market turns around slow. Even in 2008 and 9, guys, the market turned around slow. I know I said I was going to get to you guys' stocks. I ain't get to nan one of y'all stocks. All right. I'm going to get to your stocks. All right, I'm going to go up. Let me see if I can find something. Let's look at Starbucks. Thank you, moderator. My moderator been pinning stuff this whole time. I ain't seeing nothing. All right, we're going to look at Starbucks, which is, do y'all know what is it, SBUX? All right, Starbucks. What is the beta of Starbucks? What is the beta of Starbucks, people? Let me know. I already got the answer. Not only tell me what the beta of Starbucks and tell me if it's a bullish or bearish stock. I don't know why the chart's not coming up. Come on, chart. Come on, Starbucks. Yahoo tripping right now. Hold on. Well, you guys got to give me the answer because Yahoo is tripping right now. Starbucks, come on. Hold on, let me type it again. Now it pulled up the information, but it can't pull up the chart. It's on the struggle bus right now. All right, we might not be able to see the chart. So I see that it's down 8% for the year. So I automatically know it's going to be a red chart. That's why I need you guys' help in the comment section. So Starbucks is down 8%. It's a bearish company. And its beta is right around 1.0, right? So if the beta is right around 1.0 and we hit a swing high, I ain't buying Starbucks unless it's a minimum 10% down. So 10% of, I don't know where the swing high is because I can't see the chart. Can somebody tell? Oh, well, you know what? I can look at the 52-week range. So the 52-week range of Starbucks is $75 to $117. So at the highs, guys, within a year, it was at $117. So with a beta near 1, that means Starbucks might drop minimum, 10%. You get a little bit of beta, it can drop 15%. So, 117 minus like 15 push you like right around. So right now it looks like Starbucks is less than its beta. I mean, it's gone down more than what its beta is telling you that this stock can actually do. But here's the thing. If the company is in a bearish market, or if it's in a bear market and Starbucks is in a bear market because it's down 8% for the year, then the stronger moves are going to be to the downside. And I'm not thinking about buying this. Joel is never going to, I'm not going to say never. Joel is not going to buy a company where hold on, why is it not giving me the chart? Like, come on, man. Now, if I was doing this on my own, I can pull up the charts all day, every day. I go on live and it act like it don't want to work. I might have to just pull up the Thinkorswim charts because you never go wrong with Thinkorswim. I don't know why it's bugging. Sorry about that, guys. But at least we got the information in the comment section. All right, let's look at the beta of another company. Oh, there we go. Chart finally popped up. Y'all see this red chart? Starbucks hit on January the 2nd. Oh, this isn't even a one. This is a 1-day chart. Okay, here we go. We got the charts popping up. All right, in March, guys. Oh, that's why it went down more than every other stock. So the reason why it went down more than its beta was in April, Trump put out the tariffs. So not only did it drop, because look at this, guys. Remember how the beta is only 1.0? Look at where the first shelf came. The first shelf came at $100. It was almost exact. The stock went to $115. 10% of 115 is $12. So if I was going to buy Starbucks and it hit a high of 115, minus 10% would have put me right around $102. The first shelf was sitting here at $100. But because fundamentally Trump put in tariffs, nobody ain't never seen tariffs like ever since our existence. The stock dropped even more. Okay. But because it's a low beta stock, it didn't get hit as hard as Palantir, Bitcoin, Microsoft, and Google, and some of those other companies got hit because its beta was a little bit lower. Now, if the tariffs affected coffee fundamentally, then you can see it take a leg down as well. Okay. But I minimum wouldn't have bought this unless it was a minimum $100. And even if I had bought it at 100, when it dropped to 83, if I was to grab some at 100 and then grab some at 83, that would have put my average right around 90. I would have held this till about now, and it's been a year. And if it's $7 down from my $90 average, Joel would kick this stock to the curb and go on to the next one. I'm not sitting in a company this long not making money. I'll give it a shot for a year. But if you can't recover after a year, I'm done with you. And I'm on to the next stock. All right. What's another stock that we can look at? That was a good one. Because Starbucks is always something that we would think would be at all-time highs, because every time we go to the airport, every time we go anywhere, it's got the longest lines. And you know who be in that line too? Me. So I love coffee just like the next person. But the charts ain't telling us that investors are interested in it. So I don't want to be interested as an investor as well. I see UNH. So let's look at UNH. UNH has a beta of what? Put it in the comment section. What is the beta of UNH? Now, you guys are also picking companies that had like really negative news. You had a tariff that was involved with one company. You had a CEO who was shot and unalived, where everyone could see. So sometimes situations like that fundamentally will make a stock drop more than its beta. Fundamentals will overpower the beta. So you see how y'all said that the beta is 0.43. So in general, when this company doesn't have negative news, it doesn't move that much. When there's no negative news, it really doesn't move that much. If you were to look at a 5-year chart of UNH really didn't do anything for 5 years. For 5 years, even if you bought the highs, which were, I'm in 2022. In 2022, when we were in a bear market, UNH dropped from $538, guys, to $451. It dropped from 540 to 451, which was about $100 move. So that was about a 20% move. Guys, 2022 was horrible for the stock market. I'm talking about horrible. For a company like this with a low beta of 0.4 to drop 20%, that's why everybody else was down 50 and 60. 2022 was so terrible, people actually felt like the market wasn't going to turn back around. UNH was only down 20. It was only down 20%. So even if you had bought it 10% down, right, you would have been 10% in the hole. That's why you don't put all your eggs in one basket. You buy 5,000 in, then it drops a little bit more. You buy another 500. Then you wait about a year, it was up in price. But because it has a low beta, it's going to have a higher dividend. It did offer a 2.63% dividend to offset it. So whatever you have invested in it, guys, you're going to get paid 2.6% every year. All right. So even though it was down 20, you might have only been down 18 if you calculate the dividend. And then it went flat for about a whole year. It didn't do anything. So you were able to capitalize on that 3% dividend. Now, the reason why it sold off back here was because how often does a CEO get unalived? When situations like that happen, you're going to see the stock plummet. And then all of a sudden, they also all of a sudden had accounting issues. So you had accounting issues, which brings stocks down, and someone was unalived. And the stock dropped 50% on a low beta company. So when the company is doing what it's supposed to do, from 2021 all the way to 2025, the company just went up slowly. like it's supposed to do for 4 years. And then it bumped into some very negative news. You got to implement the negative news. When negative news comes into a company, me personally, when I hear negative news in something that I'm holding, I get out immediately. Do y'all remember about a year ago, CrowdStrike had this company right here had an outage. I know about this outage because me and my family were driving to Niagara. We were flying. No, were we flying? We were flying to Niagara Falls. Yeah, there's no way I was driving. So we were flying to Niagara Falls for a family vacation. Now, CrowdStrike has, if the chart pops up, which it's not doing. Jeez Louise, why can't my charts pop up today? Hold on. Come on, CrowdStrike. Pull up the chart. We're trying to learn here. Anyway, maybe they'll pop up while we're talking. CrowdStrike, there we go. Nope, that's not the 5-year chart. 1 year, 5 year. There we go. We were going to Niagara Falls on this big old dip right here in 2024. 2024, CrowdStrike has decent beta. It's a cybersecurity company. Cybersecurity companies are very common or very popular because you can't have AI without having some type of security. That's why Palantir is doing really, really well, because they're a cybersecurity company for the government. And that's not the only thing that they do for the government, but they do a lot of the cybersecurity as well. CrowdStrike was also handling a lot of the big name companies out there, like a lot of your airlines, your Ubers, your hotels, or what have you, right? So they were switching over their I forgot what was happening, but they were switching something over in the company. And when they were making that computer switch, it blanked out like a whole bunch of what's the word I'm looking for? Like if you plan a trip on Delta, a lot of the things that were set up to, I don't know, somebody help me with the words, but somehow or another, there was an outage where everybody who wanted to fly, all of, anything that was in the system was wiped out clean. So, they had to cancel like a bunch of flights to try to figure out what was happening with this switch over in the app. Now, when it happened, the stock just plummeted. I sold every share that we had because I was mad. I was PO'd because I was like, now my family, I got to drive my family from Atlanta all the way to Canada. From Atlanta all the way to Canada when we were going to fly. And then when we went to go try to find a car, we couldn't even rent a car because their systems was messed up. So the rental car systems was messed up. The airline systems was messed up. We luckily was able to find a vehicle, which is crazy. It's a whole story in itself. We ended up getting there a day late. We ended up having a very good time, but I was so pissed, I sold all my shares. Now that big dip that you guys see in the middle of the chart, that big old dip y'all see in the middle of the chart, that middle spike, that's when that happened. And look at where the stock is today. It's like a blip. It's like it never even happened. And billions of dollars was lost that day. Billions. They had lawsuits. People thought it was the end of the company, but they were like, who you gonna hire? All right, fine. We made a mistake. Who you gonna hire? We the best. Who you gonna hire? Who you gonna hire? They went and was interviewing these other companies. They were like, dang, I mean, they did mess up, but it is like it's gonna cost us more money to go with this company and then switch everything over to what they're doing. So you know what? Just make sure it don't happen again. And they weren't ignorant with it. They was like, you know what? We want to make sure that we give our consumers everything. But I told you, we got this. It happened. We're sorry. But there was no reason for you to fire us for this happening. You know what I'm saying? And that's what ended up happening. They shook hands with all of these airlines and everything is just peachy clean now. So because the company was bullish, everyone knew that fundamentally when the negative news came out, I was gone. I was like, man, bump that. But guess what I did, guys? After we had a great vacation, after the CEO came out and talked to everybody and said everything is going to be okay, even though there were still lawsuits, they were talking about Delta has $1 billion lawsuit against CrowdStrike, which still may be pending. The stock is higher than where it was. It made a mistake. It's a blip on the chart. Mistakes happens, guys. But I'm one of those types that when I hear negative news of that magnitude, I sell. CEO gets unalived, I'm selling. I can always get back in. See, a lot of you guys, when you sell, you feel like you can never get back. I can always get back in. I can always book another flight. Don't always fit. And yes, I got in at a higher price than I got out at. But you guys saw my my receipt list that I showed you guys. CrowdStrike is one of my biggest performers, even though I had to go through that particular event. All right. So, but 7 at night says, how do you do your research? Well, we're using Yahoo Finance. We're using this page or app. And the reason why we're using this is because it's free. Not only is it free, it's very user friendly. All of that information you see at the bottom of my page, I can pull up in an instance. When I look at CrowdStrike, I can look at the 5-year chart. I see that the 5-year chart, guys, is up. I can see that CrowdStrike over 5 years was up 114%. So what is that telling me? That's telling me that if I'm expecting to buy CrowdStrike today for $450, expecting it to be $1,000 in 1 year, that's not being realistic. If over a 5-year period, CrowdStrike was methodically going up, and that's even through its bad times, it's up 114% over a 5-year period. That's telling me that it's growing at about 20 to 30% a year. If I'm not in CrowdStrike yet, I'm going to wait. I see that the stock is going up and down and up and down and up and down. It's got higher lows. Higher lows means that when it sells off, guys, this low is lower than when it goes up and it pulls back again. And that low is higher. We call that higher lows. It's got higher highs and higher lows. It's going up at a 45-degree angle. You're just not going to catch me buying it at the highs. If I see that the highest price this year was $566, and I know that its beta is 1.09, Joel, I'm not going to say my government name. Joel is not going to buy this stock unless it's a minimum 15 to 20% down. That means if I see a swing high, which is $550, very easy math. 550 times 10% is $55. Double that, that's 20%. Joel ain't buying this unless it's $100 down. So if it's at 542, Joel ain't buying it unless it's 442. Don't even look at it. Don't even call me. Don't even ask me to buy it unless it's 442. Period. Where are we at right now? 453. Very simple. If I'm an investor. This is just the investing, guys, is the easiest way to get into the market because you can just use, if you see a company that's bullish, you see the beta of it, it's going to drop 20, 30%. When it drops 20, 30%, it's bullish. Buy it. Don't make it so hard. The hardest part is sitting back and waiting for it to happen. Well, CrowdStrike is down 20%. If you're interested in a company like this, this is when you get in as an investment, not as a trade. Somebody's going to buy it today It might drop 10 more percent. And then somebody's going to create some YouTube video of me saying, let me show you some of the calls Joel made. He told everybody to buy CrowdStrike when it's 20% down. I bought an option on it for 7 days and I lost my whole option. He is the worst stock picker ever. See, I can pick up on those posts because I'm like, he told you to buy it 20% off. That means he was talking to investors. You bought a 7-day option. That means you're a day trader. Why are you using an investing strategy for a trade? Because you never got educated. And now you're mad at the person that told you to buy it. That happens all day, every day in this industry. Now, don't get me wrong. There are terrible teachers that are out there. There are also terrible traders. There are terrible stock pickers out there because they don't know why they're picking them. They're picking them because they read about it all night, about what the company has, what they're doing and what's going to happen in the future. If you're fundamentally just reading about a company and you watched a documentary on the company and that's why you're buying it and that's your investment thesis, you might be right eventually. But if you add the charts and you buy that company when it starts to actually become bullish, you're going to see your profits way faster than trying to time it, which is what I'm trying to teach you guys to do. This isn't timing. This is actually saying when it drops 10 or 15%, I want to buy it. Timing is I want to buy this because I saw the CEO talking about it and I believe in the product that they want. So I'm buying it today. And then when it drops 15 or 20%, you're mad at the CEO. Why? The stock drops 20% every year. How did you not know this? Because you're now getting educated on it. You guys are now realizing stocks drop 10 to 20% all day, every day. You're just now realizing it now. So why would I put all my eggs in one basket when I know it's probably going to drop a little bit more? As a trader, you know it's going up and down, up and down, up and down. Why are you not using charts to give yourself the best chance of getting into that particular trade? How do you know where the dips are? You can't get that by studying the company all night long or even studying options. Just because you look at options and understand everything about options doesn't mean that you're going to take the best options trade. You guys make a lot of mistakes when it comes to being all in on one thing and not having enough information over here. And I'm trying to break it down in this most simplistic way so you can take the fundamentals and match it with the technicals. But you got to have a strategy. What is your strategy? Are you day trading? Are you investing? Are you long term? If you want to buy this company, are you a dividend buyer? Why are you buying this dividend paying company? Are you buying it just for the dividends? If you're buying it just for the dividends, do you want to catch that company when it has horrible news? Because if it's just regular news, I'm gonna be honest with you guys. Think about it. I want you guys to think about it like this. Why would I buy a dividend paying company when the market is bullish? What is the benefit of that? Think about it. If you know the market's going in this direction, why would I buy a dividend stock? Dividend stocks are to protect you under conditions where the market may go flat or go down. Or I get it. You might want to live off of the dividend. I get that too. You're sitting on $10 million. But a lot of you guys are not sitting on $10 million and living off the dividends. You're actually buying the dividend paying stocks because you're scared of the market. It's not because you're living off of the 7% that they're giving you. I know people that are doing that. They're like, Joel, this is how I live. I have to buy dividend paying stocks because it's my only income. I'm like, okay, that makes a lot of sense. But you're trying to take a little bit of money to a lot of money and you're buying dividend stocks because of what? Because it's protecting you when the market goes down or flat. When the market's going up, don't nobody want to be in no dividend stock because you're losing out on the market. The market's moving way more than what any dividend any of these companies can pay. I don't care if it's 20%. The reason why those numbers are high is because they have to do it to protect themselves. They know people will go buy Apple. Why would I go buy this company that hasn't done nothing for 20 years when this company over here is being super innovative and leading the whole industry? Scared. You scared. You scared. You scared. That's why. And that scariness of the market is costing you money. You're not doing anything. I talk to my extreme traders, my extreme investors and traders all the time. I know where the fear is. No one wants to lose any money. But sometimes when you get overly scared and you're trying to play in this game, you end up losing more than when you started. Or you're so aggressive in the market, you're not taking advantage of what the market has to offer. The market is set up so that you guys can make wonderful 1,000% plays in the options market, 2,000% returns in stocks. But you guys got to play that game. If I want to make a 2,000% return in a stock, then I need to be in that stock for 5, 6, 7 years. If you're going to play in the options market and you want to make a 2,000% return, you best learn these charts because you competing with people like me. All right. You can do it. You can be aggressive or conservative. You just got to play the game the way the game is being played. These are the rules. You gotta, if you're a trader and you're not looking at charts, it's almost impossible to make money in this game because you're only going off fundamentals. Fundamentals work long term. Fundamentals don't work day to day and week to week. You got presidents tweeting, you got countries bombing other countries, you got pandemics, you got all types of things that happen short term that affects the long term just for a second. If you don't have charts, you can't see that. You can't see when to get in. You can't see when to get out. You got to understand how to read this if you want to get in and out the market within 12 months. If you want to be a long-term investor and never look at charts, that's great. But at least know when the volatility index hits. So as an investor, you know when to put your foot on the gas. Every great investor out there knows to go all in when that VIX hits 50. Some of you guys just learning about the VIX today. Look at to the right side of my screen. What are the 6 things they're telling you to look at? The market tells you what to look at. If you look over here to the right, you're going to see 6 things on the screen. And I'm going to slide it over so you guys can see it. There's 6 things on my screen. They're there for a reason. You're looking at one of the most basic platforms that's out there. Why do you think they're showing you these 6 things? Because these are the only 6 things that matter. Look at this before we get out of here. What do we come in here and we talk about every day? The S&P 500. It's not because I just want to do it and I have a love affair with the S&P 500. I'm teaching you guys how to look at the market like 1%ers. The second one in the middle is the Dow. The right is the NASDAQ. Now we're looking at Yahoo Finance and they're talking about the futures market. They're basically saying if you don't even understand what the futures market is, you're going to be lost. This is the most base called Yahoo Finance. And some of you guys don't even know what futures are. Or what a Russell is. Or what a VIX is. You know what gold is. You know one of the 6. You guys should know all of these things when you're like 5 or 6. Now I get it. I wasn't taught when I was 5 or 6 either. That's why we're changing the world. These are here for a reason. Futures, the VIX, and commodities. That's what basically runs the whole world. You got your 500 largest companies. You got your tech companies that are over here. The Dow is just the most famous. So it's just going to get there because it was like the first. It's like the OG of all the indexes. Ain't nobody looking at it, but it's the OG. So it gets a spot just because it was there in the beginning. The Russell represents small companies. The VIX, some of you guys just learning about it today, and it's been right there in your face. It's just you just overlook it because you didn't know what it was. What the heck is a VIX? I don't know, but I know gold. And every time you'll say, oh, I know S&P. I think I know the NASDAQ. I know gold. I know S&P. I know the NASDAQ. I know a little bit of gold. The VIX has always been there. Always. It's always been there in your face. This is what you look at to know how to catch bottoms and not highs. What does 14 mean? That means ain't nobody afraid of the market right now. Ain't nobody afraid of the market but you. 14 means nobody's afraid. 14, usually the market's near all-time highs. The market spends 80% of its time like right around between 14 and 20. The market spends most of its time not being afraid. Most of its time. But y'all spend most of your time being scared. The market spends most of its time at all-time highs, but y'all spend most of y'all times being scared. That don't even make sense. When the VIX gets to 50, you buy any and everything that you see. It's the bottom. You don't believe me? Pull it up on a chart. You're going to be so angry. You're going to feel like you wasted the last 20 years. You're going to say, what the heck? Joel, you mean to tell me I didn't have to take no class? I didn't have to learn nothing. I literally could have just looked at the top 10 companies, waited for the VIX to hit 50, gone all in, and I would have been okay. I would have been like, yep. Without us. Well, you had to get educated a little bit. And I'm teaching you guys this now because I want you to be mad. I want you to be angry. I want you to be mad at that teacher that never taught you this. I want you to get mad at that educator who wasn't educated on this subject. I want you to get mad at that individual that claimed that they was a pro and they never taught you what the S&P was or the VIX or what a futures was. Or when they taught you what a futures was, it was so complicated you couldn't understand it. I taught it to you guys in like 2 days. For free. If you were here, I want you to be so angry at these people taking advantage of you. But now we're going to get on the right path. We're going to get on we're now understanding what we're supposed to look at. And you can't be afraid of this market. It's going to drop. When it drops, how do you handle the drop? Do you have some powder to be able to buy something? Do you know how to buy it or why you're buying it? Are you buying it at the all-time highs or are you buying it 20 or 30% off? If you're buying Bitcoin 20% off, you haven't learned a thing. You ain't looked at a chart. That's how I can tell who I'm talking to. Joel, I'm thinking about buying Bitcoin today. They ain't looked at a dang chart. All you had to do is pull up a chart for 2 years and say, oh, man, every time it dropped 40, 50%. Why you drop it? Why you buying it 20% off? Because Cousin Al told me that this is how you make money. Get educated. Well, you're here to get educated. All right. I make fun of you guys because I made the same mistakes you made. I make fun of you because it's the same way I thought. I know what's going through your brain. I know how you're approaching the market. I know the lazy approach to it. There's so much money to be made if you guys just open your eyes and just educate yourself just a little bit. You'll be surprised. You'll be like, oh my God, I can't believe I understand this. Now, I told you guys in 30 days, I'm going to make you the stock jock in your family, guaranteed. You're going to know so much more about the market than your people that are working in finance. You heard what I just said? You are going to be smarter than the people you know working in finance. And I'm not just saying that because I just want you guys to come here. It's because you actually are. Because those cats come to me to get educated. Because they only see the market one way. They come in the market. Their only job is to take your funds, place it, maybe put it into something like the S&P 500. They don't know about They know a little bit about the VIX. They don't know about beta, and they don't know about none of that crap. They know how to put your funds in this mutual fund and get a percentage off of it. And I don't knock them for that hustle because they are protected. If they're putting your money in the S&P 500, you maxing that bad boy out, they'll get you to millions in 16 to 17 years. Some of my best friends out there are financial people. They stay clear of these lives because they know I'm going to attack them. And they're cool with that. They know their jobs. I know my job. I'm able to talk about all of this stuff. All right, I got to get out of here. It's 8:06. I will see you guys tomorrow. Y'all know I'll go ranting all night long. Thank you guys for helping me achieve my goal. Again, we had a superfan session that happened earlier today. During those superfan sessions, if you're not a superfan yet, become one. Those are sessions for those superfan sessions. I do give them a little bit special preferential treatment in certain areas. They're able to come up on a panel, ask their questions. We get to engage with each other. So everyone that's in there is becoming like a family, at least for now. Today was meet and greet. It was a little awkward, but today was a little meet and greet. But over time, the names are going to start becoming a lot more common because I'm going to do this every week. And you can ask me anything you want. We can talk about everything, anything that you're going through. There are going to be moments in the market where we're all losing. We need to be able to hold on to each other and say it's going to be all right. Hey, what's going on with the market? What do you guys see? Right. There's certain things that we all have to overcome to get to that special goal that we want to get to. So, if you want to become a fan, great. If not, continue to come here and let me educate you. All right. Anytime you come to these sessions, you're going to get educated. I promise you, I'm not going to just sit here and play music and ask you guys to send me GIFs. I'm going to educate you guys, and it's going to be worth more than what you guys are gifting me. Although I love all of the GIFs. Thank you for the hats. All right. I'm a true investor and trader. My goal has always been from the beginning to make sure that I'm doing well there so I don't have to lean in on sessions or TikTok or what have you. This is fun for me. I love educating. I love giving back to you guys because I love to see you guys do well in the market. All right. So that's my gift to you guys. Every single solitary person that came on that's live today, you guys are geniuses at something. It just so happened that this is what I'm a genius at. Right. And I'm able to lean in on it. If you're a genius in some type of subject and you want to share it with the world, TikTok is the perfect platform to be able to do that. All right. Which is why I love it. I'm so happy that my aunt brought me over. I did go over, so she's probably going to her sessions. My aunt is my favorite for journeys. She taught me how to monetize this platform. She starts right after I end. So if you go and find her as my favorite for journeys, she's going to teach you all about the platform that you didn't even know about. All right. About the, about gifting and about the goals of the day and different levels that you are in here and the percentage splits and stuff that I had no idea was going on this particular platform. So make sure that you guys take care of everyone that's in this box that helped me out, that helped me achieve the goal. The supporters that are over here in this box, if you click on that box, you can see everybody that tapped, everybody that supported the particular room.